Hi everybody, Ken Heinz here, HFR President with the May 2022 HFRI 500 Performance Snapshot. May was another good month for the HFR 500. Interestingly enough, the market paradigm really hasn't changed that much, and the outperformance of the HFRI over equity markets has continued through the first part of the year. The HFR 500 posted a narrow decline of about 0.5% in the volatile month of May, although macro hedge funds, in particular CTAs and commodity-oriented macro hedge funds, continue to post strong outperformance of equity markets. We've seen a very similar market environment, very volatile and declining equities, rising interest rates, skyrocketing commodity prices, and generational inflation. And we'll talk a little bit more about that. Before we get into the usual strategy and sub-strategy comments that we make on the month of May and the year-to-date performance so far, I put together this slide, which I think really captures a lot about the market performance that we've seen in the first 5 months of the year. You can see here oil has posted the strongest gain, with a gain of over almost 60%. But then you see 4 consecutive positive performances of macro hedge fund indices. The macro commodity index, which we know is fundamental discretionary commodity traders, up nearly 40%, 17.6% for the CTAs and the HFR 500 macro systematic diversified. The overall macro, which includes all of those, up 14.1%, and up over 5.125% for the fund of funds risk mitigation index. And then after that, you see the overall composite down 1.4% thus for the year. To the right, everything you see is U.S. equity markets, or you see the S&P 500, you see the MSCI indices, and you see the index of Treasury bonds, 30-year Treasury bonds index, all posting steep declines for the year so far. You see here the composite declined by 0.5% in the month of May. May was a very volatile month with steep intra-month losses in the first 3 weeks of the month before recovering a good portion of those losses. Overall, the Nasdaq only declined by over 2% for the month, but was down much more than that intra-month. And you can see here macro essentially unchanged with the decline of 20 basis points and only about 40 basis points for the HFR 500 equity hedge. Just the fixed income relative value about the same as the composite, down 54 basis points, and just under 2% for the HFR event-driven index for the month of May. Drilling down to the sub-strategy level, here's where you see some of the strong macro sub-strategy performance and energy-oriented sub-strategy performance. The top area in the month of May, 5.5% for the equity hedge energy-based materials index, 4.75% for the fixed income relative value asset-backed index. We see a gain of 1.7% for the macro multi-strategy index, and then the fundamental macro commodity index, the leading area of sub-strategy performance thus far of the year, gain of 1.2%, as I said earlier, gain of a little over, or decline of a little over 2% for the Nasdaq composite for the month of May. As I mentioned at the outset, in the first 5 months of the year, we've seen very strong macro outperformance of equity market benchmarks. You can see here 14.1% gain for the HFR 500 macro index. Fixed income relative value index, 1.7% gain thus far for the year. Those are primarily fixed income multi-strategies. As we mentioned earlier, for the year, a decline of 1.4% for the overall composite. That obviously taking into consideration higher beta strategies, including equity hedge and event-driven, which you see here down 6% and 8% for the year-to-date so far. And you can see that those compare favorably and have strongly outperformed the decline of the Nasdaq of about 22.8%. That's through the end of May. As I mentioned earlier, the drivers of sub-strategy performance recently, not only the first 5 months of this year, but even a good portion of the last 2 years, have really remained the same. HFR 500 macro commodity index, you see here gain of 38.3%. 17.6 for the trend following quantitative systematic diversified index. We see 14.25% for the energy basic materials index, that's in the equity hedge area, and then the gain of 11.5% for HFR 500 macro multi-strategy index. Again, all these areas strongly outperforming. The decline of 22.8% of the NASDAQ composite thus far in the first 5 months of the year. There's a lot of great information on the Investable HFR 500 indices on our website and on YouTube. If you're watching this video, please subscribe to it. You know that we do regular monthly performance commentaries and performance updates on YouTube, and those are also on our website. We have a monthly webinar. We'd be happy for you to join as well. Please go to visit www.hfr.com, and when you get there, please, you can easily find the performance of the HFR 500 as well as the investor guidebook. There's a tremendous amount of great information there on how the HFR 500 is really a solution to common benchmarking issues that institutions face or challenges that they face, and how this represents a solution to those. Certainly, if you would like to set up a call, talk more about this, you can email me directly, Ken Heinz at HFR. You can email indices at HFR or HFR500 at HFR.com. Happy to set up a call and talk a little bit more about the index and how it works as a solution for so many institutional challenges to benchmarking hedge fund performance. Thanks again. Look forward to speaking with you next month.